EZZ Life Science Holdings Limited. The ASX code is EZZ. The company has a market cap of approximately 23 million. EZZ Life Science Holdings is a genomic life science company with a mission to improve quality of life and human health. EZZ has a focus on genomic research and development to address 4 key human health challenges: genetic longevity, human HPV, I should say, Helicobacter pylori, and weight management. Presenting for the company today is independent non-executive director and chair, Glenn Cross. Glenn, welcome, and please take it away.
Thanks, Manny. EZZ has a mission to become a leading life science company in Asia Pacific, improving the quality of life and human health by accelerating innovative products to market. Next slide, please. We have a diverse product range. We have our EZZ branded products, and we are also exclusive distributors in Australia and New Zealand for the Aeron range of skincare products. So we develop, formulate, produce, manufacture, market and distribute health supplements, which include probiotics and functional foods under our own EZZ range. The top 3 products by revenue in the first half of FY24 for us were our 175 milligram NMN tablets. NMN is nicotinamide mononucleotide, which is a precursor to NAD. So it's been proven to work in cell repair and obviously assist in anti-aging. Our lysine growth capsules. Lysine is an amino acid which is essential for people. Most of it comes from our food, but sometimes for various reasons we need to supplement that by taking a supplement, a capsule. Our third highest grossing product for the first half of FY24 was our bone growth chews, which have proved very popular with children and adolescents. In terms of the Aeron skincare range, we are, as I mentioned, the exclusive distributor in Australia and New Zealand, and we distribute primarily through pharmacies, supermarkets and specialist retails. The top 3 products by revenue were the hyaluronic acid essence, the hyaluronic acid face masks, and the niacinamide masks. Next slide, please. Company highlights for us for the first half of FY24 really has been continued high demand for our products. As I mentioned, they are all scientifically formulated. We have research collaboration with a number of universities. We developed a product with the University of Sydney, and we currently have a research program with Auckland University. We have a very strategic omni-channel market strategy, primarily direct-to-consumer digital strategy, and I'll talk a lot more about that in some future slides. We're in a very strong financial position, as you'll see when I give you the highlights for the first half and also some results from Q3. We're very profitable and we pay dividends to our very patient and loyal shareholders. We have a very established client base throughout Asia Pacific, Australia, New Zealand, Greater China, and now moving into other markets in the Southeast Asian region. One of our key strengths is our experienced management team. They have a deep understanding of this business and a deep understanding of the markets that we work in. We have multiple levers for growth in the future, both in terms of continuing our domestic business, but also international markets, and I'll talk a little bit more about that in future slides. Next slide, please. So this is our Q3 FY24 financial overview. Receipts from customers was 23.6 million, which was up 111% from the corresponding quarter last financial year. Operating cash flows were just over $2 million, an increase of 372% from our last quarter. Our gross margins are very good and continue for all of our products at 70% plus, and they're steady. We have no external debt, and we have $14.5 million in the bank, which is a 15% increase on the previous quarter. Next slide, please. This talks a bit about our development pipeline. We really are data-driven in terms of looking at consumer insights into our next generation products. And we spend a lot of time looking at that data, looking at what do consumers want in our key markets. Spend a lot of time on our supply chain. We manufacture all of our products in Australia under good manufacturing practice. And where appropriate, all our products are registered with the Therapeutic Goods Administration, the TGA, here in Australia. This is a major plus, not only in Australia and New Zealand, but also throughout Asia and our new markets. People can be very comfortable that the product is manufactured under world-class processes, and the TGA is a world-class therapeutic goods authority, so people can be assured of the quality and the safety of our products. Very important at the top end of the market where we live. Again, I mentioned previously, we have a deep understanding of this business. Our sales and marketing team understand the markets we work in, and they are experts at our omni-channel strategy. Next slide, please. This talks about a little bit about our extensive distribution capabilities. We are in bricks and mortar distribution as well as e-commerce platforms. In terms of Australia and New Zealand, you'll see there we're in over 600 chemists. We are also in some specialty chemist chains in Greater China and Southeast Asia. Our products are also distributed through specialist and grocery retailers, some 200 plus, and you'll see them listed on the slide. In terms of our e-commerce platforms, locally, Amazon and eBay are important to us, but increasingly our strong revenue growth is coming from our Asian-based e-commerce partners, Tmall Global, Taobao, TikTok, Kaisho, and Pinduoduo. Next slide, please. So our first half FY24 highlights. Strong revenue growth of 15.1 million, which was a 43% increase over our FY23 revenue. Our gross margin is stable, as I mentioned, and above 70% for our products. And our strong cash position has been even further enhanced with our Q3 results. We open new distribution channels, and there's strong growth on all of those, Douyin, Tmall, Kaisho, and Pinduoduo. And we're very conscious of expanding our distribution business into new markets. We entered Vietnam during the first half of FY24. We're very excited about this market, and we've just started to receive our first sales through our distribution partners. And we've moved into the Middle East with our first market there in Kuwait. We launched 11 new products under the EZZ brand and several new products under Aeron. Next slide, please. This slide talks about our revenue mix by customer. You can see they're continuing to grow across those key e-commerce partners. One that I didn't mention before is the bottom one, which is HIC, which is a private e-commerce member-based platform in Australia, New Zealand, China, and as you can see, sales growing continually from that platform as well. Revenue by geography, 26% coming out of Australia and New Zealand, and of course our revenue growing exponentially into Greater China and just entering those few new markets for us. We're very conscious of now the growth in China, which we expect to continue at those levels, but we are very consciously looking at new markets. Next slide, please. So what can you expect for us in the future? More of the same. Our cash receipts, we believe, will stay high and produce positive cash flows. Our revenue growth has been strong year on year, and we believe that's going to continue. You'll see 3 new products launched under the EZZ range in FY24, adding to the 11 in the first half of FY24. And with all that cash, we are very much on the acquisition trail. We are looking for products and businesses that will add value to our strategic direction, and you'll hear more about that coming up shortly. Thank you. Of course, our disclaimer, which we didn't show at the very beginning. Thanks, Manny.
Okay, we can see the disclaimer. That's all right. But thank you for that. Okay, there are a couple of questions for you.
Sure.
Now, just coming back to the financials, receipts from customers, as you pointed out, were up 111% for the quarter, which is a pretty solid number. My question is, how confident are you can continue that sort of run rate? And how confident, and how are you going to drive it? Like, what are the levers you're going to be pulling to get those sort of results again and again and again?
Yeah, good question, Manny. Well, we've certainly produced those results over the last few years. Our FY23 results were up. Our growth was over 30% on FY22, and we were listed in the top 40 growth companies on the ASX by the Fin Review in their annual review. So we expect growth to continue. We're releasing new products and opening new distribution channels in our domestic markets here in Australia and New Zealand. I mean, the China market is massive, and we really understand that business. And the growth there, we believe, will continue. Vietnam is looking at a very good potential growth market. We went to a major trade show in Europe early on in FY24. We haven't moved into that market yet, but there is potential. And we've started to look at the US market. This business around health supplements is a growing business. It's interesting. Post-pandemic, I've looked at some of the surveys done globally, and really people have taken a much greater interest in looking after their own health across the world. And we see this business and the potential in future growth exciting, and we're really just really entering it on a global perspective.
Okay, and can I, in terms of margins, I think your margins are reasonably flat the last quarter, I think. How, are there some strategies that you're working on to perhaps improve margin performance as well as just those headline revenue numbers?
Yes, always. That slide showed 70% across the board. Some of our margins are higher than that, but we continually look at our supply chain and our manufacturing We certainly don't expect our margins to decrease at all, but we're always very conscious about making sure we sell at the top end of the market, so we need those strong gross margin percentages.
Okay. And sort of turning to geographies, you've mentioned a couple. You did say you're in sort of early discussions at this point, or that you can see opportunities in Europe. You're starting to look at the US, talked about Vietnam. China's clearly a massive opportunity as well. And I think you mentioned the Middle East. Any other markets that that are out there that you're sort of kicking around at the moment?
Yes. We've just taken on a new strategic partner distributor, and they have a strong presence in North Asia, in Japan and Korea. So we'll be looking at those moving forward in the next 12 to 18 months.
All right. And just before you go, acquisitions you also mentioned. No doubt the balance sheet's in pretty good nick, so there's no debt. You've got a fair amount of cash there. Your cash flow is rock solid. So there are no obvious hurdles for you in that respect. Is there a particular geography you're focused on in terms of acquisitions now?
Most of the acquisitions that we've looked at are in Australia and New Zealand in terms of new products and companies. We're very conscious that one of our real strategic pluses is the fact that we do manufacture these products in Australia under world-class GMP in world-class GMP facilities, and our products, where appropriate, are registered with the TGA. So that will continue to be a strategic direction of ours.
Okay, great. And just one more. Who are your key competitors at the moment, or who do you see as being key competitors in your particular space?
There's a lot of people manufacturing and selling supplements. We don't have any direct competitors. We're not in the vitamin business necessarily, where Swiss and Blackmores were so successful as Australian companies. We very much look at using genomics and personalised medicine to develop specific products for that growing market. We don't really have any direct competitors. Some of our products have competitors, but not as a business.
Okay. Glenn, thank you for your time today. That was great. We hope to get you back soon. Have a great weekend.
Thanks, Manny. Always a pleasure.